As an auditor, give your comment for the following. As an auditor, give your comment for the following disclosure made by a company which adopted IND-AS for compliance compilation of financial statements. This, dear friends, in front of you, People's Advocate Sreemannarayana Mallela is there, talking on auditing standards and its importance during the course of investigation into CBI, ED, financial crime cases. The most important thing is compilation of IND-AS is the most important element during the course of examination of the financial statement, which was listed companies especially. Now, as an auditor, give your comments on the following things. In the balance sheet, the subhead inventories contained an item goods in transit in which a consolidated amount aggregating the cost of the raw material in transit and loose tools billed on company but delivery not made to the company had been specified. How you deal during the course of examination of the audit. This how we can deal likewise. See, the basically this point it is a balance sheet item inventory, but the goods in transit once received it is a stock. As long as see the goods in transit as per division 2 schedule 3 of the companies act 2013, cost of raw material in transit shall be disclosed as subhead of raw material, and loose tools billed on the company would be shown as a separate subhead. Loose tools under heading inventories, part of current asset. Thus, disclosure of consolidated amount aggregating the cost of raw material in transit and loose tools is not correct. Understand, my dear friend, YouTube watch viewers. See the basically what question he asked in the balance sheet, the subhead of inventory contained in the goods in transit, in which consolidated amount aggregating the cost of the raw material in transit and loose tools billed on the company but delivery not made by the to the company had been specified. How you deal in the balance sheet in the P&L, being a statutory auditor, how you deal this item, how you notes on these accounts to the financial statement. Regarding this, the goods are transit as per division 2 schedule 3 of the companies act 2013. Cost of raw material in transit shall be disclosed as a subhead of the raw material and loose tools bill on the company. Would be shown as a separate subhead loose tools under the heading inventories, part of the current asset. Thus, disclosure consolidated amount aggregating the cost of raw material in transit and loose tools is not correct. So cost consolidated amount of the aggregate cost of raw material in transit loose tools is not correct disclosure. Okay, friends. Now the next question: provision for doubtful debt of trade debtors was grouped in a provision under the current liabilities. Is it correct? This is a correct. During the course of examination of your audit, provision for doubtful debt trade debtors was grouped in provision under current liability. This term, doubtful debt, is an adjustment to the carrying amount of assets. Hence, no provision is created separately as per Ind AS 13. Provision, contingent liabilities and contingent asset. Those provisions should be shown in the trade receivable. Provision for doubtful debt of trade debtor was grouped in provision under the current liability. The term doubtful debt is an adjustment to the carrying amount of assets. Hence, no provision is created separately for it as per Ind AS 37. Provisions, contingent liabilities, and contingent assets, those provision should be shown net trade receivable. Okay, see, provision for doubtful debt of trade debtors was grouped in the provision under the current liability. The term doubtful debt is an adjustment to the term the term doubtful debt is an adjustment to the carrying amount assets. Hence, no provision is created separately as per Ind AS 37. Provision, contingent liability, contingent assets, those provisions should be shown net trade receivable, not a group as to their presenting adjustment. So it will be adjusted figure so that net provision will come. Okay, no need to create it again on that provision. Okay, guys, next. In statement of profit and loss, prior period income was shown under other income. Is it correct? Is it correct? According to Ind AS, according to auditing standard, what precautions should be taken by auditor and how to disclose what the notes and accounts, that we'll see now. See, in statement of the profit and loss, prior period income was shown under other income as per Ind AS 8. Accounting policies changes in accounting estimates and errors. Prior period income should not be shown in statement of profit and loss. The entity shall adjust the opening balance of each affected component of equity for the earlier prior period presented and the other comparative amounts disclosed for each prior period presented as if the new accounting policy had always been applied. In statement of profit and loss, prior period income was shown under other income. As per Ind AS 8, accounting policies changes in accounting estimates and errors. Prior period income should not be shown in statement of profit and loss. The entity shall adjust the opening balance of each affected component of equity for the earliest prior period presented and the other comparative amounts disclosed for each prior period presented as if the new accounting policy had always been applied. Understand? So, what India 8 is speaking? India side speaking, accounting policies, changes in accounting estimate and errors, prior period income should not be shown in the statement of the profit and loss account. The entity shall adjust the opening balance of each affected component of equity for the earlier period presented and the other comparative amounts. And other comparative amounts disclosed for each prior period presented as if new accounting policy had always been applied. So, like this, you need to write. Next item, sale of scrap. A sale of scrap is incidental to manufacturing or included in other income. See, important thing is sale of scrap is incidental to the manufacturing. How would you disclose in P&L? And what's going to be treatment to the balance sheet? And what is the significance of that? See, sale proceeds of scrap incidental to the manufacture were included in other income. If you refer IndAS 2, as per IndAS 2, inventories sale proceeds of scrap incidental to manufacture should be deducted from the cost of the main product. Thus, disclosure of the sale proceeds of scrap as income is not a correct. The sale proceeds should be adjusted to the cost of the main product. So, those disclosure of the sale proceeds of the scrap off as another income is not a correct. Okay, guys. Now, next question. Payment towards one-time voluntary retirement scheme introduced during the year was included in employee benefit expenses like staff welfare expenses. If you refer to India's 102 share-based payment or India's 19 retirement benefits. So, which standard will apply? How you are going to deal in your financial statement about this item? We are going to look and we'll answer that question. See, my dear friend, the payment of the one-time VRS during the year included in the employee benefit expenses. As per IndAS 19 employee benefits, if the termination benefits are expected to be settled wholly before 12 months after the end of the financial reporting period in which terminate benefit is recognized, the entity shall apply the requirement of short-term employee benefit. In case it is not expected to be settled before 12 months, the entity shall apply the requirement for long-term employee benefit. In the instant case, it should be shown as short-term employee benefit. In a place, employee benefit expenses. Thus, treatment of such a payment as employee benefit expenses is not a correct disclosure. Understand, my friend, the payment towards one-time voluntary retirement scheme introduced during the year was included in the employee benefit expenses is not correct. Why? Why is not correct? As per IndAS 19 speaks like this. Employee benefits, if the termination benefits are expected to be settled wholly before 12 months after the end of the annual reporting period, which terminate the benefit is recognized, the entity shall apply the requirement for short-term employee benefit. In case it is not expected to be settled before 12 months, the entity shall apply the requirement for the long-term employee benefit. In the instant case, it should not be shown as a short-term employee benefit in place of employee benefit expenses. Thus, treatment of such a payment as employee benefit expenses is not correct. Okay. Now, let's go to question number B. ABC Limited is consistently following accounting standards requirement under section 133 of the Companies Act 2013. During the year tax audit under section 44 AB of the Income Tax Act 1961, the board of directors informed you that profit of the company is properly arrived and the accounting standards applicable to have been followed consistently, and as such there need not be any adjustment to be made as per income computation disclosure standard under section 145 of the Income Tax Act 1961. Based on the requirement of law in this regard, examine the validity of the stand of the management in this regard. My dear friend, to answer this question, to answer this question, income computation and disclosure standards ICDS section 145 of the Income Tax Act 1961 deals with the method of accounting under section 145 subsection 1. Income chargeable under the heads profits and gains of business or profession or income from other sources shall be computed in accordance with either of the cash or mercantile system of accounting regularly employed by the SSE. Further, section 145 subsection 2 empowers the central government to notify in the official gazette from time to time income computation and disclosure standards to be followed by any class of assessees or in respect of any class of income. Accordingly, the central government has, in exercise of the powers conferred under section 145 subsection 2, notified 10 income computation disclosure standards ICDS to be followed by all assessees other than an individual or HUF who is not required to get his accounts of one previous year audited in accordance with the provisions of section 44 AB following mercantile system of accounting for the purpose of computation of income chargeable to income tax under the head profits and gains of business or profession or income from other sources from the assessment year 1780. In the instant case, ABC Limited is a consistently following accounting standard in compliance with section 133 of the Companies Act 2013, but not complying with the provisions of income computation disclosure standard notified under section 145 of the Income Tax Act 1961. Contention of the management that they are following accounting standards and need not to make any adjustment as per ICDS is not correct. Thus, ABC Limited is required to adjust the profit in compliance with the income computation disclosure standards. See, in the instant case, ABC Limited is consistently following accounting standards in compliance with section 133 of the Companies Act 2013, but not complying with the provisions of the income computation disclosure standards notified under section 145 of the Income Tax Act 1961. Contention of the management that they are following accounting standards and need not to make any adjustment as per ICDS is not correct. Thus, ABC Limited is required to adjust the profits in compliance with ICDS. So, in the instant case, ABC Limited is consistently following accounting standard in compliance with Section 133 of the Companies Act 2013, but not complying with the provisions of the income computation and disclosure standards notified under Section 145 of the Income Tax Act 1961. Contention of the management that they are following accounting standards and need not to make any adjustments as per ICDS is not correct. Thus, thus ABC Limited is required to adjust the profits in compliance with ICDS. That's what. Now, I would like to go next question. CA, see guys, you understood know this question. What I'm telling you, the precise answer is, see, what the contention given by the management is not correct. What those guys are telling, no need to make any adjustment. Who said no? During the tax act, what you do? According to ICDS, add or less, which is allowed by the Income Tax Act, which is not allowed by the ICDS. That ICDS impacts you need to give in tax audit report. So the management contention is not correct. Even though you prepared financial statement in accordance with the section 133 or 133, according to 145 of the Income Tax Act, the moment you're following accrual basis of accounting, you need to apply ICDS conditions. What is that? Notional gain is not an income. Notional expense is not an expense. So, certain items to be disallowed, certain items to be allowed according to ICDS. So, that adjustment you need to give during the course of computation of the total income for the purpose of while filing income tax return. Otherwise, your computation statement will be wrong. So that what element in the AS deals, especially computation of PGBP income. Your NDAS will impact your profit or loss because of NDAS adjustments. Those are 10 NDAs will be, sorry, these are 10, sorry, not NDAs. Those are 10 ICDS is there. According to ICDS, you need to give impact of your PGBP income. So based on that, your adjustment will be reflected your total income of your return. So, my dear friend, next let's go to next question. The question is like this. The question is like this, my dear friend. CA Needle CA Needle had been appointed as an auditor of Mr. Fabric Limited. In the course of audit, had been observed that inventory including work in progress had been valued whether or not to accept finding from the management explain inventories. See, the question is, CA Needle had been appointed as an auditor of Mr. Fabric Limited. In the course of audit, had been observed that inventory, including work in progress, had been valued by the management by using experts hired by them, analyze the relevant factors to decide as whether or not to accept the finding from the work of the management expert in valuation of inventories. Now, for this to answer, evaluating the work of the management expert as per SA 500, audit evidence when information to be used as audit evidence has been prepared using the work of management experts. The auditor shall, to the extent necessary, having regarding to the significance of that expert's work for the audited purposes, evaluate the compliance capabilities and objective of the expert, obtain an understanding of the work of that expert, and evaluate the appropriateness of that expert's work as audit evidence for the relevant assertion. The auditor may obtain information regarding the competence, capabilities, and objectivity of management expert from the variety of sources such as personal experience with the previous work of that expert. The auditor, the auditor may obtain information regarding the competence, capabilities, and objectivity of management expert from a variety of sources such as personal experience with the previous work of that expert, discussion with that expert, discussion with others who are familiar with that expert's work, knowledge of that expert qualifications, published papers or book written by that expert, aspects of the management expert's field relevant to the auditor's understanding may include what assumptions and methods are used by the management expert and whether they are generally accepted within that expert field and appropriate for financial reporting purposes. The auditor may also consider the following while evaluating the appropriateness of the management expert's work as a audit evidence of the relevant assertions. The relevance and reasonableness of that expert findings or conclusions, their consistency with the other audit evidence, and whether they have been appropriately reflected in the financial statements. If that expert's work involve use significant assumptions and methods, the relevance and reasonableness of the assumptions of the methods, and if that expert work involve a significant use a source data, the relevance, a completeness and accuracy of that source data. The auditor may also consider following while evaluating the appropriateness of the management expert's work as audit evidence for the relevant assertion. The relevance and reasonableness of the expert's findings or conclusions, their consistency with other audit evidence, and whether they have been appropriately reflected in the financial statements. If that expert's work involves use of significant assumptions and methods, the relevance and reasonableness of those assumptions and methods, and if that expert's work involves a significant use of source data, the relevance, completeness, and the accuracy of that source data. Understand, my dear friend? See, just a few minutes, I'll switch on the lights and then I would like to continue the discussion. My dear friends, the people's advocate Sreemannarayana Mallela is talking on auditing, importance of the auditing standards in various situations. Statutory auditor express his opinion on the financial statement and how to deal with the specific items according to NDAs, according to YCDs, according to laws, prevailed, prevailed, prevailed laws and significances. Friends, now the next question is, we'll see how to handle that. This is the next question, my dear friend. Okay. This question is, oh, ah, this question is like this. M and Co, a sole proprietary chartered accountant firm in practice with an office in a busy belt of city. Mr. M and Co is a sole proprietary chartered accountant firm in practice with an office in a busy belt of city, had great difficulty in regulatory attending to the consultancy needs of his client, who are mostly located in an industrial cluster in nearby outskirt, which is situated at a distance of 20 kilometers, 26 kilometers from the office of the firm. To mitigate their difficulty and to have ease of business, a facilitate center was opened in the industrial cluster. The proprietor managed both the office and facilitation center by himself. No intimation was made to the Institute Chartered Accountants of India. Examine whether there is any professional misconduct in this regard. This regard, actually, you are out of the city or some other city is required to maintain a full-time chartered accountant as a branch auditor. But here, we'll see the thing here. the maintains a branch office in the same city as per section 27 of the Chartered Accountants Act 1949. If chartered accountant in practice has more than one office in India, each one of these offices should be in a separate charge of a member of the institute. However, a member can be charged of two offices if the second office is located in the same premises in the same city, in which first office is located or second office is located with a distance of 50 kilometers from the municipal limits of city, in which the first office is located. Further, a member having two offices of the type referred to above shall have to declare which of the two offices in his main office which would constitute his professional address. In the given case, M and Co, a sole proprietary chartered accountant firm in practice with an office in the busy belt of city, and had a great difficulty in regularly attending to the consultancy needs of his clients. Therefore, a facilitation center was opened in the industrial cluster, and the proprietor is managing both office and facilitation center. Through distance between his office and facilitation center is sort of second office within the prescribed range of 50 kilometers, but Yamanco will be liable for the misconduct as prescribed intimation about facilitation center. The main office should be sent to the Institute Chartered Accountants of India. So you guys understand, in the given case, M and Co is a sole proprietary chartered accountant firm in practicing with an office in a busy belt of city, and had great difficulty in the regulatory attending to the consultancy needs to his client. Therefore, a facilitation center was opened in the industrial cluster, and the proprietor is managing both the office and facilitation center. Though distance between his office and the facilitation center short of second office is within the prescribed range of 50 kilometers, but MNCO will be liable for misconduct as prescribed intimation about a facilitation center, and main office should be sent to the Institute Chartered Accountants of India. That should be done. That will be a professional ethics violation. But according to other rule, within the 50 kilometer, no issue. No need to maintain a qualified chartered accountant with that branch because it is within the field of 50 kilometers. But he has to intimate that where office was put up, the facilitation center was initiated. That is the professional misconduct. Friends, next question will go. Just a sip of water. Uh, Friends, let's take 5 minutes break. Again, I would like to continue one more video. Thank you for watching on this YouTube channel. But each 40 minutes, maybe 1 hour, we can take 5 minutes break. No issue. According to me, you give me just 3 minutes break. Again, I'll continue one more video with the same concepts and with the dealing about auditing standards. Thank you.